Hormuz if necessary. Now, the Strait of Hormuz is one of the world's most vital shipping lanes. You can see it at its narrowest point.
Even though the strait is only about 21 miles wide at its narrowest point, it carries a massive amount of the world's oil trade every single day. Because of its strategic location, any tension, conflict, or disruption in this region can immediately affect global energy markets. Governments, oil companies, and financial markets around the world closely monitor this route because it acts as a gateway for oil exports from major energy-producing countries in the Middle East.
Basically a pinch point that has been effectively reduced to just a trickle now. About 1/5 of daily global oil.
This means that a large portion of the global economy depends on the stability of this single shipping lane. Countries in Asia, Europe, and other parts of the world rely heavily on oil transported through the Strait of Hormuz. If the flow of oil is disrupted, global energy supplies could shrink quickly, which would push oil prices higher and affect industries, transportation, and even household expenses.
The Energy Information Administration estimates that 84% of the crude oil and 83% of liquefied natural gas
Reports also show that most of the oil and liquefied natural gas traveling through the Strait of Hormuz is shipped to Asian markets. Explanation countries like China, India, Japan, and South Korea are some of the largest buyers of this energy supply. Because these countries depend heavily on imported oil and gas, any disruption in the Strait of Hormuz could impact their economies and energy security. This is why developments in this region are closely watched by governments around the world.
Yeah, exactly. And, seeing that picture, you can see the choke point, but you also need to understand this is such an important artery to move energy products to specifically.
Some oil tankers are now waiting before entering the strait due to safety concerns. Shipping companies are worried about potential attacks, military activity, and rising insurance costs. When shipping slows down or becomes risky, fewer tankers move through the route, which can reduce oil supply in the global market.
You've got a lot of tankers, big vessels that are already loaded up. They're just standing by to try and get through. And because the war risk premium has increased so dramatically,
the idea behind this move is to protect commercial ships and ensure that global oil supplies continue to move safely through the region. Naval escorts can help reduce the risk of attacks and give shipping companies more confidence to continue operating in the area.
You're seeing the Iranian government coming through and targeting critical energy infrastructure across the region, from Oman to here in.
Energy infrastructure such as oil refineries, gas terminals, and pipelines are extremely important for global supply. If these facilities are damaged or forced to shut down, the impact could be felt across international markets. Reduced production combined with disrupted shipping routes could create a major supply shock.
You see energy infrastructure coming into question. The worry is, are we going to see more capacity being taken out of the market? If that is the case, expect much higher oil prices.
Higher oil prices usually lead to increased transportation costs, higher fuel prices, and rising inflation in many countries. This can affect businesses, governments, and consumers around the world. This means that the global energy market could face uncertainty for a long period of time. The Strait of Hormuz has always been a strategic and sensitive location, and any crisis in this region can have worldwide consequences. For now, governments, shipping companies, and energy markets are closely watching how the situation develops, because what happens in this narrow waterway could influence global oil prices and economic stability.